Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com, and welcome to today's morning call full version. So yesterday we started the week, was pretty slow, a little bit of a pullback, but nothing extreme. Lots of sectors held where they had to, and lots are still toying with those moving averages that we're trying to figure out what's next with. But there's some individual things to do, which is keeping us busy, which is why you're watching this video. This morning, Europe's up a little bit. Asia is still up. Emerging markets are doing better with the weaker dollar since the Fed day, and our futures are up 4 or 5 handles. So if you go to the chart of the S&P cash, you will see the 21-day moving average is still intact. We've been riding it ever since clearing this descending trend line here post-election. Yes, this was your little actionable area coming into November election, and Donald Trump was elected, and then we've been in this accelerated trend ever since with lots of different trades along the way. Here was your move above 2,300. Okay, that gave you a move all the way to 2,400, which gave a little bit of an exhaustion signal, which triggered a move back to the 21-day. And then here is what we just held yesterday. Okay, so basically very symmetrical, still very orderly, and we'll keep trading it that way until it's not. Right? The trend is your friend until it's not. So anyway, here is your new point of reference to write down. 2369 was yesterday's low. That is what we could use moving forward. Here is, I guess, a small little, flag type pattern. If the market did want to start getting back on its game, first step would be to clear this spot here, which is about 2379. Last time it tried to clear this 2373. That was Fed day. That was a little bit dovish, and since then it's taken 3 days to pull back and retest this spot. So this is your spot to trade against. We're still above the 21-day. Still, things still look like they're hanging in. There are definitely still divergences between sectors, among sectors, and that's been the way we've been correcting over the past few years by rolling corrections. So you don't want to be in the sector that isn't strong. The money keeps passing around. Some guys are paying attention to the banks that are having their first real pullback since really their rally started. If you look here at the FAS, you will see it's been choppy and very powerful. Powerful trends need to correct a little bit. Here was your last big tradable move, and then this red bar right here we flagged, meaning a possible exhaustion top. So if you sold into this or sold when it got into the gap, you said, okay, I'm going to wait. So if you're waiting, you're now below the 21-day moving average, and here is the 50-day. So this could be a really good spot to buy if you sold strength or you've been waiting to buy a dip. If it might not even get there. So this is what as of yesterday. 46.28 is the pivot. Maybe it opens up, they try and sell it down, and then it comes back up and you get a red dog reversal low, for a potential entry, or maybe over time it sees the 50-day, and that's going to be very important because that's been a pretty big trend, or we're actually near the trend right here, for the actual banks. Yesterday I tweeted to you guys saying I bought Goldman. It was a good trade, didn't stay with it because it just felt, it kind of felt heavy. This wide range bar was, pretty big and potent to the downside. So yesterday it was down like $1.50. We bought it, it went up 50 cents, and it was a small trade. So I was just thinking if they want to get the other banks to see the 50-day, they're going to have to continue to get this lower. This has been, most of the relatively weakest lately. But it does that. It was also, look how relatively weak it was, where it gave back the 50-day the last time and everyone thought it was game over. Then boom, right back. So Goldman Sachs likes to wear everybody out before it does something. So at this point, keep an eye on it. It's up a little bit this morning. 241.52 is your pivot. If it trades below and stays below, we'll see if it helps drag the banks down. If it gets below, comes back above, that drill there. JP Morgan, still kind of working its way down towards this 50-day moving average also, which I do think is a better buy than sell. Little red dog reversal top here. We got some of you guys short to make some money on the VTF. I didn't short it, I just didn't buy it. And now you have yesterday's low to write down, which is 89.79, and here's your 50-day. When I bought Goldman, I also told you guys I bought Bank of America. That I tried to do as an accumulation swing trade. Still doesn't look great. Last time we had a really nice strategy here was, tier 1, tier 2, sell tier 1, or sell tier 2, get back to tier 1, and then, just actively maneuver it. So as of now, this little support here could, wind up matching up with the 50-day. At this point, I'm in tier 1 versus 24.42. I think, any pullbacks you can continue to buy. If you didn't chase it and get caught up here around 25.80, anything but, in this 24.5 down to the 50-day could be your accumulation for, a decent trade. On the small caps, we're the leaders with the banks, and they seem to have done a whole lot of nothing. But as of now, they did hold above the moving averages that they reclaimed on Fed Day. Still, big sideways channel after an enormous move post-election. In this little breakout try, it wasn't, didn't act well, didn't have much power, and then came back and retested it. And now I would say it's got to stay above this like 137.31 to rebuild, and then potentially if the market wants to, do something to the upside, maybe if it gets healthcare through, or maybe that fabulous tax program gets done, maybe it can continue. But for now, keep taking trades, and this is your new point of reference, 137.31. Oil's up a little bit, that's helping the futures. But oil to me is broken and just a trade and not even worth your time. It's below every moving average and just not doing a whole heck of a lot. Lastly, I'll just show you the bios, the IBB. Someone pointed to a double top here. It had a big move down on that Amgen news, which was unexpected. At this point, I still think it's in the game. It's just not as fast, not as not as high strung. But 293.57 was the low from Friday. It held above it yesterday, so it still could rebuild, in my humble opinion, as long as we continue to see some stocks act well. In the bios, we're still in like 20% of those calls that we had. It was a nice trade here when this broke above this spot, and then retested it, and hasn't had much power. It's just riding this 8-day, and as long as that continues, could be a trade towards that 130. I have some risk off in it, but I still have some calls just in case. Sold most of them. After this move here, I think if I stand corrected, we bought it somewhere around here, so I sold it into that. But at this point, I still have small, so you see that on my disclosures. Somebody asked me if I could go over INSEE. INSEE is a small, tiny bio. We bought some calls here, to start the year. Went to the moving average, sold half, which really paid for the rest of the ones that I had. So down here, I really don't care much. Just wasn't as big of a winner. But comes out with some data, comes out with something good. Maybe we get a big pop. If not, it didn't work well, and I should have sold it all here. But if I would have, sold it all here and then it went to 18-ish, then I wouldn't have been feeling good. So either way, some things work well, some things just, don't work out as much. So let's go into high beta land, which, we do trade actively. Netflix, for those of you who are still long it, I am not. Still looks good. I should be long it, but can't be in everything. Here was, the last time it ignited from us for the note. Gave us a move to here. This is when I sold it on this little spot. But you know what? If you if you sell something on a small little topping tail, just because that's a small sell signal and you want to stay in it, you better be able to buy it back when it holds like the 8-day for another move. If you sell it and like, oh, I'm so happy I sold it, and then you don't trade it again, and then it goes to here, how well did you do? So it all depends on how active you are. If you're just swinging it, a lot of you guys are swinging it from this gap pivot and you're just letting it work out. But anyway, for today, we'll see if there's a viable pivot above 146.50 for maybe a move towards 150. We shall see. Facebook's another example, just to show you the same exact thing, riding the 8-day all the way up. Unfortunately, there's been no real tradable power. Like the one tradable power move we had here, if you remember, we bought tier 1 here, bought tier 2, took home tier 1, and then it looked as if it was going to just fail, and then it held, and now all of a sudden it's another new all-time high here at 141. I think BTIG upgraded it. So if you're long from so if you sold here saying, hey, this day didn't look so good, it engulfed this day, then if you're that active and you want to be in Facebook, you have to buy it back when you hold the 8-day support. So if you held it or bought it back yesterday, all of a sudden, boom, you're getting paid up $1 on the upgrade. So anyway, I wouldn't chase it. Buying strength here has been great. Buying the dip's been better. Same thing for Google. Google had its first 2 down days. Guys on the VTF were like, hey, you know what? There's no power to the upside, so I'm going to buy it at the 8-day because it's been holding the 8-day and the 21-day this entire time. This is when it regained some of its composure. So if you bought it yesterday, hold it versus 864.66, and then maybe sometimes it makes a new high. What I'm going to be focused on today is Amazon. Amazon was really good to us here. If you do remember, this is when it broke above this wedge, then gave us a nice little bull flag trade here, and then another one here. and then when it kind of failed our numbers, went back in the penalty box. But some of you guys bought it as it cleared into this gap above 820. We've been trading it. I did get long yesterday, and we'll see if there's like a real, old school trade. What do I mean by an old school trade? You buy tier 1 here, you're able to add at 858, you'll be able to add at 860, and then you could sell some at 863, 864, 865, and then just sit in some for a swing trade, towards, who knows, 880, 890. There's a lot of price targets at 1,000, but this tight pattern, you would think if you bought it on this little, wake-up candle, okay, well, not a big wake-up candle, but, you should be able to buy 859s and not have it all of a sudden come all the way back down and go red and go down $3 and then try it tomorrow. But anyway, we'll see what happens. That's happened a lot in this market. So at this point, my strategy is I'm long some. I actually bought some pre-market, and I want to add through this 860 and then sell some to get comfortable and then hold some for a real move. A nice wide range candlestick, kind of like you had here. But we shall see. Then you go to Tesla, which has been real good to us also. A lot of you guys on the RIA are in options with me. Kind of got, I guess, a little lucky here when Mobileye got taken over. I'm buying the June 860s, bought them for like $10, and then all of a sudden, boom, now I think they're like 20. And created a call spread on some, and some I'm free and clear, and now maybe there's another active trade here intraday. If it can get above 264.55, 265-ish, there's more of a gap to be cleared. So to me, it's back in the game. Great trade in the start of the year, right into the earnings area, which Tesla has a problem with. It corrected a bit, reclaimed the momentum moving averages, and now we'll see if a new trend starts above this, all these moving averages to take us back towards the highs. So it's back on my very active list. We'll see what's next here. This was a really nice trend. But I'm going to try and just hold some options and hold an option call spread and then trade, the setups. So it was a lot of nice setups, in June. That's June, January, and February, like a nice one here, another one here. This one I remember was great. So maybe sideways and up, and we start a new one from a higher level. But we shall see. Then, just an example, I showed you like in Facebook and some of these names how if you see an ugly candle and you get out, you got to get back in. Well, on Friday, I was in Florida for a wedding and I got stopped out of Apple, but I saw the upgrade. I saw a few, how strong it's been, so I bought it back. So yesterday I bought back Apple pre-market and then I added through a pivot. Why did I get out of Apple? Just because I was like, hey, look, this candle was stronger than this one. It's testing the 8-day. I'm very active, so that got me out. From Florida. I'm like, if it gets below 140.26, who knows where it goes? So that was my stop. So when I checked at the end of the day, I'm like, I'm out of Apple. But then that didn't stop me from buying it back. What's it called? Pre-market when I saw it up, and then adding to it, with a few intraday pivots, and now I'm still in it. So I'll trim some and I'll hold some. And that's the way you got to do it. If I sold it here and said, I saved myself great money, even if it went a little further, if you don't get back in, it's hard to re-engage. We started to re-engage Apple again, right around here after having a really nice tradable strategy here. If you remember, post-earnings, we're like, okay, we're going to buy it versus the pivot, bought it here, added it there, and then I think I sold it into this day, and then I missed that because I just didn't get back engaged. So now we're back engaged, and hopefully that'll be good for us. Cisco, I figured I'd just throw in there, tech strong. It's not a barn burner. A lot of people are sitting on cash and just want to have an idea. So I'm like, maybe buy versus this support, buy versus 33.84. Then at some point, maybe it takes it out to make highs. It's probably like not a great trader, so that's why I feel like you buy some versus here. Maybe not even add if it goes, just sit. Microsoft also is not a great trader, but it's still hanging around. Maybe one day you get a wide range bar, so you're better off buying weakness and strength. But it does seem if the market wants to continue, this is a pretty strong trend here. Just pointing it out. Oracle had those numbers. And I don't know if it holds the gap or not, but this is your spot. Some of you might be long versus pivot. If it gets in the gap, I would get out of the way. If it goes in, comes back above, at least you'll have some price discovery. It's come a long way. Be careful. They sold the strength on that open. They didn't buy it. Let's go into Chinese land. Baba being really good. A little better. I mean, not good, but better lately. More continuity. The past 3 days have been better to trade versus when we added a lot here and then got stopped out and had to re-engage, and now I'm still long, and here is your spot that I think you could sell into. It's up 50 cents this morning. If you want to trim some, hold some, you could do that. Momo took the day off yesterday, maybe another day or so, and you could rebuy this one for new highs. Now see, make sure it holds the 8-day like it's been doing since earnings. This was your earnings clearance, and now a little sideways work, and then at some point it can clear that again. And the test gave you a 2-day move, a little loose and wide, but if you bought it versus the earnings gap, you're doing just fine. I think you're better off doing it that way than over trading it. Maybe at some point it works its way back up to that spot. Let's see what else. Okay, did I go over? Oh, someone wanted me to go over Amgen. Amgen, if you take a look here, definitely surprised to be down that much, but at this point held this. Just like other things that have gone in the penalty box, Amgen's in the penalty box. You could be long versus this, or you could wait for an intraday trade if it gets above 171.59. Perhaps it's just a quickie to fill a portion of that gap. But if it goes sideways, doesn't fill that gap, and breaks this, you could see it fill that gap. So that's Amgen. Some of you guys are asking me why I'm in this AUPH, because it's on my disclosure. I bought it yesterday just because some guys think that this has a big future with a lupus type drug. I'm not exactly sure. I just participated because it had a nice little bull flag and volume yesterday, so I bought it. I'm still in some. Don't know if it takes this out, but there's some thoughts that it could go to 15.20, but I'm going to trade it technically very small. You know how I don't like to be in bios. It was up here. It did a money raise below 7, and it held in pretty well. So we'll see what happens there. And the metals and the miners, some of you guys are long from what's it called, Fed Day, which was right here. If you're actively long, just be long versus these moving averages. Maybe it works its way back towards that prior peak. Maybe it doesn't, but at least you have some points of reference. 116.69 is that there. The TLTs also have had a decent move since Fed Day. I'm not in it. I think still, the 50-day area is probably going to be a better sell than buy to reclaim to get above here. I still think we go at least 2 rate hikes, maybe 3. I guess we'll see what happens with healthcare getting approved and then tax reform. We need some pro-growth strategies in order to continue, or we have earnings in 4 weeks. We'll see what happens then. So all in all, massaging positions and trying to buy dips and add a little bit at pivots for breakouts and then selling quick has been working. Rotating through sectors, different strategies has been working. The volume's been low. Things have been hard to trust. But, I think if you have a little less size and more positions and give things more room, they've been trending better and the market's making you more money than you pushing keys, being way too active and, and over trading. So with that said, we have our plan for the day. Futures are up. If you bought yesterday, I always sell a little bit pre-market and then see the composure, and then I get into positions based on the new composure of the day, because sometimes the futures early on are not indicative of how the day is going to go. So I'll tweet at you what I'm doing. I'm going to try and add to Amazon. Let's hope that it doesn't open up $3 and then go down 5. It opens up 3 and goes up 7. That would be more of an Amazonian type trade, but we'll see how it plays out. Have a good morning, and I'll see you at the recap.